Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe, the weekend edition for Sunday, the 20th of October. Starting off with the FTSE 100, and here you can see that we're trading really very close to the resistance line there from May. We need to break above that and preferably 8400 so that we're sure end of day close above 8400, but the line is actually around where we closed on Friday, and maybe with the rising 50-day line and the RSI above neutral 50 at 57, the market's decided that it's already factored in the budget later this month and will head up to 8700 in the top of that rising trend channel. More likely, perhaps, is that we have to test either the 50-day line there at 8270 or the floor of the channel there, 8211. But as I said, the RSI and the general configuration at the moment suggests a rather unlikely move to the upside. Moving on to the DAX, and maybe this is a more pure market, not affected by fiscal concerns. Here we've got the sort of third time lucky for being above 19,500. Looking for this market to head up as high as 20,400 by the end of next month, or even sooner than that. And obviously near-term support towards 19,500. Worst case, I suppose, is we've got to head back to 19,200, which was the previous support level. RSI at 67, so not overbought yet, even though we are at the highs. And that sort of U-shaped, or those U-shaped moves, very, very strong in terms of the price action. Moving on to the Dow, and here looking forward to Trump winning, or maybe the other person, who knows. Here very close to the top of that rising trend channel, 43,600. And as to be said, it looks as though the market is anticipating Trump rather than Kamala, but we'll see what happens there. Key reversal to the upside on Friday, and very near to our 43,500 target. On the downside, looks like there is a wall of support there at 42,600, which was last week's support and also the peak in September. Not looking for any rug pull worse than 42,000, whatever happens there. Moving on to Bitcoin, where people are getting rather excited that this market has or will break through that line of resistance there from March. It's a bit of the equivalent of the setup that we have at the FTSE, sideways consolidation. Well, the 50-day line rising now. Maybe all we need to do now is wait to see whether the 200-day line is starting to rise, which it looks as though it's flat at the moment, but maybe over the next week it will start turning up and we go into a golden cross, which could propel this market up to 75,000 and that June resistance line projection. On the downside, hoping that we won't get anything lower than the September peak, 66,300, and that we are safe from any rug pulls, but a little bit early to say. We'll probably have another week of trying on that one. Moving on to gold, and here picture is up and away. We'll be looking for 2,800 by the end of next month. The way things are going, might even get that by the end of this month. Very impressive indeed. The old peak there near 2710, and above that on an end of day close, 2,800 looks as though it is well entrenched as a target level. Worst case here is that we have to have a rug pull to 2620, the initial September peak and October support area, but as I said, with the setup we have at the moment, looks very strong. And again, we've got that sort of U-shaped, V-shaped turnaround there, which is normally a decent signal, as was the bounce off RSI 50, which was around the 2640 area. That worked very well indeed, and it's probably the reason I keep on mentioning that particular setup. Moving on to crude, and here the situation looking rather damp. We've got the possibility of the 200-day line now falling, but the 50-day line already falling. So the situation there is that we're looking at the floor of that falling trend channel, 6450, over the next, well, I suppose the next couple of weeks. RSI failed below neutral 50 as well, so this is looking very negative, unless I suppose there's some horror on a geopolitical level. Moving on to the pound, and here we can see that the market bouncing back with a bear trap rebound from below $1.30, maybe expecting that the budget won't be quite as bad as we're fearing, or that interest rates won't be cut as aggressively as the governor of the Bank of England is suggesting. Above 130, looking for the 50-day line again, 131.30, but it's difficult to see how we can get much higher than that ahead of the budget. Moving on to the stocks, and a couple of disappointments to start off with. The first one is Avacta, which managed to get through the 200-day moving average again. That's the third time in 3 months, and did the same as it did with the Deutsche intervention on the 16th of September, so 1 day above the 200-day line and then falling like a stone. We want to see an end-of-day close back above the 200-day line there at 64.5 pence, really to unwind the negative pattern of the last few days, all the more negative given that there was decent news from the company, so the market maybe had already factored that in. Above the 200-day line, looking up to the mid-70s, basically below it, and there's a risk that we have to fill that gap down to 52 pence again, which would be rather irritating and also rather frustrating at the same time. RSI still just about above the neutral 50 level, so we really need to rise tomorrow or Thursday to get our bounce on the neutral 50 level. Moving on to Audioboom, which had a great RNS during the week, but as feared and as suggested, there seems to be a permanent seller in there around the £2.50 mark, which could be $2.50 one day. But in the meantime, failing at that wall of resistance at 250 and now just clinging to the floor of that rising trend channel around $2.10. Below that, we've not only got $2 in focus, but we could also head back down as low as $1.70. So it just looks as though every time that stock goes up, somebody sells aggressively. On to a rather better situation, which is Allergy Therapeutics, or at least better at the moment. Here you can see that rather remarkably, we haven't had a red candle on that chart since the 4th of September. Don't think there are many stocks that can say that, unless they're suspended, I suppose. Here we've had a gap through a rising 50-day line, and looking for 7 pence by the end of next month, with quite a lot of gusto given the very blue setup that we have there. Looks like a very strong chart indeed, which is rather rare for any biotech situation at the moment. Upside value, while we're above 4.25 pence, the floor of that channel from back in November. Moving on to a stock which I hardly ever look at, which is a shame, Beximco, and here what's nice is the way that we gap through the 50-day line there around 27 pence. Above that, we've got the prospect of heading up to the main resistance, main 2024 resistance of 41. And given the lay of the land on the technicals, that looks as though that is the minimum we will get on the upside, especially after the way that we had bullish divergence going into the lows that we had. So we had much lower lows for last month, but the RSI going up all the time. So very impressive there. Ideally, we stay on the right side of that 50-day line around 26, 27 pence. Next up is a stock which I like at the moment, just because the last time it was called up to the 2.5 pence area, it actually did it. Nice close to the week last week as well, and bouncing above a rising 50-day line, which tends to be a very good signal. So we're really looking for 2.5 pence or 2.6 pence, the early October peak, very, very soon, perhaps as soon as the end of this month. Ideally, we stay on the right side of 2 pence, which was a resistance on the way down. Another stock, which is maybe a bit of a dark horse, but doing rather well at the moment, is Corero. And here, if you look at the broader picture, we've got a rising trend channel, which has been in place basically since the beginning of 2021. And the top of that channel heading for as high as 37 pence, which we're looking for by the end of next month. Especially given the way that we're just rising in a step fashion, one of our favorite setups there, and we've had unfilled gaps to the upside. So this looks like it's a very, very strong situation indeed, despite the slight pullback that we had on Friday. Ideally, we stay on the right side of 24 pence, which has been recent resistance for the shares, but the overall pattern there looking very good indeed. Moving along to another stock which doesn't normally get included in proceedings, but here we've got a double gap higher for Enwell, rising trend channel there from the beginning of the year, top of the channel there at 25 pence, and that looks as though that would be the minimum we would expect by the end of next month, given the double gap higher and also the way that the shares are consolidating above the old resistance there, around the 22 pence level, 50 and 200-day lines, both rising as well. On to Eurasia, where we're looking for the investor webinar later this week. And here, a nice end of the week, actually, and with the shares bouncing above a now rising 50-day moving average. It tends to be a decent sign, a sort of sideways shuffle, as I call it. Still looking for the stock to somehow get from here, where we are at the moment, below 2.5 pence, to head up to the 3.5 pence area by the end of next month, which is the or was the peak that we had in September. Maybe this is also one of those stocks which might benefit as a Trump trade, hoping that he will bring peace to the world, which we haven't had for a little while now. Moving on to Ferrexpo, another potential Trump trade, according to the powers that be on Twitter. Here you can see that we've broken 50 pence and did that with quite a bang on Friday. Opened at the lows, closed at the highs, which we did also on Wednesday. Very, very strong price action there, rising 50-day moving average as well. So it looks as though the shares will have enough gas in the tank to break through and hold above the 200-day moving average at 54 pence. Initial target there, 63. Best case scenario up to 75 by the end of next month. And the risk reward quite good in the sense that really, unless we get an end of day close back below 50 pence, we're feeling quite chipper about the prospects here. Final thing to note is was the RSI bounce at neutral 50, which we have in the shares for around the 45, 46 pence level. So that did work. On to EnergyPathways, which took a bit of a breather over the, last week basically, or the week before last. Current situation is that we bounced off just below old resistance there around the 2 3/4 pence area. Above that now, looking for this V-shaped rebound to take us back up to the target we were looking for before, 4.5 pence, and looking for that to happen by the end of next month, but the way things are going, hopefully by the end of this month. Ideally, we stay on the right side of 3 pence now, which was Friday's support. And as you can see there in the RSI window, we've had a RSI rebound above neutral 50, so that is normally a decent leading indicator on the upside. On to MicroSalt, which reminds us why the AIM market is a complete disaster, in the sense that when the shares of a company actually go up, which is once in a blue moon, the company has to put out an RNS saying that, or making an excuse for the rise in the shares. So there we saw the response to the share price movement, and it was confirming that there's no trading or operational update that would change the situation. Look at the chart there as well. You can see that we closed on the resistance line there around 50 pence. Above that, still looking for the shares to hit up to 75 pence. Cold water RNSs permitting, and ideally we stay above the Friday support there at 47 pence, ahead of a move towards the 75 pence level. Moving on to Ovoca, which I've been very excited about for some strange reason over the recent past. Here we've got a V-shaped bull flag. We've had a golden cross between the 50 and 200-day lines midweek, and a little bull flag there, V-shaped bull flag, and that suggests that we are heading finally to 2.2 pence by the end of next month. With such a strong setup, we also had an RSI rebound off neutral or above neutral 50, and also an unfilled gap to the upside of the low. So it's almost all the positives there for the shares. Let's see if that hits, or actually works and hits that target. Onto Primoris, and here we've broken above a rising 200-day moving average at the end of the week. We've got a rising trend channel there from back in January. That's heading for 7.1 pence. Looking for that by the end of next month, especially given the way that by that time we'll already have had a golden cross. And also we can enjoy the way that the shares gapped up in the end of August and have held that gap. So multiple bullish points there on that situation, over and above the RSI rebound above 50, which also helps the situation. Finishing off with a rather dangerous looking chart, but at least it's included here on the basis that it looks as though we've got a converging triangle here at Euru Metals. We've bounced or ricocheted off a rising 50-day line there at 103, and looking for the shares to break that resistance line there from back in August, 145, and head up to as high as the top of the overall triangle there from September last year, up to £2.60. Maybe by the end of next month, I suppose you could say at the end of next year, but the stock can really move, and the setup does actually look as though it is quite strong. But the key here, staying above that 50-day line now. That's it from me today. More updates during the week.